What's going on with the housing market in Toronto? In my previous video, I talked about the condo market. I think everybody knows that the condo market is very sluggish, but what about freehold, detached, semi-detached, those kinds of things? Because depending on who you ask, you'll hear everything from market's kind of dead to multiple offers are back. And to be quite honest with you, both of those things are true. So today, what I'm going to show you is what's really happening with detached and semi-detached resale properties, new listings, active inventory, absorption rate, median days on market, and of course, price. Most importantly, I'll translate those numbers into the information that buyers can use to their advantage in this market and what sellers can expect from this market. So I'm going to start with supply, and then I'll get into demand. And for this beginning part of the video, I'm going to talk about detached properties, and then we'll get into semi-detached after. Just know that generally speaking, for the city of Toronto, there are a lot more detached properties than there are semi-detached. Again, when you're looking at the entire city. When you look in certain segments, there might be more semis than detached, but across the board, a lot more detached properties than semis. Just bear that in mind. Now, when you look at this chart specifically, this is the number of new listings on a month-to-month basis for detached homes. And we've got three lines. There's a green line, an orange line, and a blue line. The blue line represents 2023, orange represents 2024, green represents 2025. And you can see right from the start, here's January, going through to the spring, peaking in May, coming back down in the summer, and then coming up to where we are now in September, that for the entire year, every month, we've had more new listings in 2025 than in 2024 and in 2023. So that means that sellers, for whatever reason, have wanted to put their home on the market in greater numbers than they have in the previous couple of years. I probably would say that that's due to kind of like a pent up, I don't want to use the word demand, but like a pent up want or need to list their home for sale, because 2023 and 2024 weren't awesome markets. So I think at some point in time, people are like, I'd like to sell my house. And so interest rate cuts were coming. They've started to happen now in 2025. And generally speaking, sellers felt, okay, this is fine enough time for me to put a home on the market. But you can see that the number of properties that are coming on, greater numbers than in previous years. Now, when we switch over to total amount of active inventory, you can see that, again, the number of total listings on the market for any given month have been much higher than previous. Now, active listings and new listings aren't exactly the same thing. The number of new listings is how many properties are listed for sale that month, but the active listings is how many properties in total are on the market for each given month. So that's properties that have been listed, but also properties that were already on the market and are still on the market, just as an example. You can see that the gap is significant for basically any month. It follows very similar, almost identical kind of seasonal patterns, rising from January up until the spring, falling back down in the summer, and then seeing another kind of like fall bump. But there's no question that, the gap between the green line and the orange line is significant. And so what that shows us is that inventory is much higher than it has been in the previous years, and that is a bonus to buyers. Now, when we move on to sales, you can see that at the beginning of the year, there actually were ever so slightly more sales in January than they were in July. 347 for January compared to 343 last year, January, and 334 January of 2023. But then from February onwards, right until, through to April, sales were lower than the previous 2 years. Now, generally speaking, there was a lot of, I would say, commotion in the market earlier in the year with Trump taking office and tariff announcements, and that caused a lot of uncertainty. Stock market was ripping like crazy, and then it was coming down. There was, the information about tariffs that was coming out was, I think, causing a lot of people to just really pump the brakes on any kind of like real estate related activity. And it showed in the number of sales. Now, we did get to a point where the number of sales in, kind of May, June, I think that's June there, did actually kind of catch up and surpass in some cases previous year's sales. And then you can see from June onwards, the green line is actually the highest one out of the three. So we did get to a point where, with all that kind of extra inventory and the amount of extra new listings that were coming on the market, that was resulting in a greater number of sales as buyers eventually gained a little bit more confidence with what was going on and their own situation, probably economically as well. Will that trend continue or not? We will see. right now. We're in September. We're looking to see what that number is going to be in October. And we'll still get our seasonal kind of fall off as we go into the winter, but where will the green line be in relation to, the orange 2024 line and the blue 2023 line. Now this next chart you'll see at the top, it says SNLR, it's sales to new listing ratio. It's just comparing how many sales with how many new listings there are. Another way that you can describe it is the absorption rate. So if you haven't seen the condo video that I put out, the absorption rate is just how many new listings are being absorbed via sales. It doesn't have to be that exact place, but if there's 100 new properties that are listed for a given month, and there are 50 sales, then the absorption rate would be 50%. So if we see absorption rates anywhere between 40 and 60%, then it's a fairly balanced market between, buyer and seller demand. If we see absorption rate of greater than 60%, it's very seller friendly, and below 40% is very buyer friendly. So you can see at the start of the year, very buyer friendly conditions. Below 40%, so in the low to mid 30s, pretty consistently. In 2024 and 2025, you saw anywhere from kind of mid 40s, low 40s, but got as high as 62%, which, that would indicate a little bit of an early kind of seller's market. That was in April of 2023. And so what happened in the summer, though, is that our green line kind of crossed over the 2024 and even the 2023 line. And even in September, what we see here, they almost actually perfectly overlap in the chart, where all 3 Septembers for the 3 years are a absorption rate of 29%. So we've sort of caught up, I guess, if you will, with, absorption rates from previous years. So I don't know that we can say, oh, well, it's, Trump and tariffs and uncertainty and that kind of stuff. Really, I think what it had to do with the absorption rate was how much inventory there was. The sales were lagging. The inventory, both new listings and active inventory, were much higher than we've seen in previous years. And that is going to translate into a much lower absorption rate, or much lower sales to new listing ratio. But sales have continued to kind of climb a little bit upwards and kind of rise above what we've seen in previous years. New listings and active inventory are still higher, but that kind of bump in sales has improved the absorption rate to the point where it's now at very similar levels to what we've seen in previous years. Now, the question is, what happens from here moving forward? You can see that the absorption rate for both 2024 and 2025 can get quite high, and they get to a point where numbers get over 100% in a month like December, where just anecdotally, or just as a side note, I guess, if you will, December is a month where sellers basically take it off, but buyers still stay very active. So that's why we see absorption rates of 112%, because we actually see more sales than we see new listings. Buyers are kind of ready to make that purchase, and they don't want to go into the following year having not bought anything, but sellers go, okay, well, I'm not listing my house during the holiday season. And so we get quite high sales to new listing ratios or absorption rates during months like December, for example. This is a chart showing median days on market. So what that means is how long is a property staying on the market, but it's not the average, it's the median. So I didn't want to do average. Again, if you haven't seen the condo market, I went into an explanation about why I prefer median to average, but essentially averages can be either pulled down or dragged up by outliers. So median gives a much more kind of accurate idea of what's going on at the moment. No matter what way you slice it, when you look at the median listing days on market, properties are sitting for longer in the detached market. That, in my mind, absolutely has to do with how much inventory is on the market, right? Buyers have more choice, they can take their time, they can be a little bit more patient, and so that means that sellers need to be a little bit more patient. Again, a couple weeks, the better part of a month, but nothing too crazy in terms of how much time it's actually taking. Compared to 2024 and 2023, there's no question that it's taking longer to sell. Now, everybody's favorite metric, price, again, median price. And you can see that it's been a very kind of tumultuous year. It started off a bit higher in January and February, but then we saw a crossover in the spring and into the summer where prices have dipped below 2023 and 2024 by quite a bit. So, to me, this matches up in line with, again, inventory and also listing days on market. So the more inventory you have, the more active inventory you have, the more choice that you have, the higher the supply. Even if demand is up, if the demand is not up as much as the supply is, then you will get downward pressure on prices. And that's what's being shown here in this graph. So absolutely. Now, we are seeing a little bit of a catch up though. You know, the median price for September of 2025 was 1.3 million, again, for detached homes. In 2024, it was only $10,000 more. In 2023, it was $80,000 more. What are we going to see in October, November, December? Looks like we're kind of, catching up, but a lot will be determined in the coming months. Okay, I'm going to go through the data for the semi-detached much more quickly because I'm not going to have to explain what each of the charts are showing necessarily. I'm just going to share with you the trends. So if we look at new listings, identical pattern to detached, you'll see the green line is higher the whole way compared to the blue and the orange line. Then when we go to active listings, we will see the exact same pattern where the green line is significantly higher. This is active listings, significantly higher, and the almost identical pattern seasonally to detached properties as well. The gap between, this year and last year, very significant in terms of the amount of properties that are actively on the market right now. Then when we move into sales were actually a little bit stronger. So very much in line with what we saw happening in 2024, and then actually improved beyond 2024 and even got to a point where sales surpassed 2024 and 2023. And that's where we're currently in. So I would say from about kind of like June, July, August, September, sales in semi-detached properties have been fairly strong relative to previous years when you make that comparison to the detached market. And so when we get to that absorption rate, if you recall, for the detached market at the beginning of the year, it was kind of like in the 30-ish%. And in the semi-detached market, you can see 40s, 50s, mid 40s, low 40s peaking and surpassing the other previous years, 61% in August. And even in September, I don't know if you can see that there, but it's right over here in the chart, 39% compared to 36 and 31 from the previous 2 years. It appears as if the semi-detached market is actually faring a little bit better than the detached market. And then listing days on market, just like the detached segment, semis are taking longer. But if you recall, they're selling typically just a little bit faster than detached. You remember this number right here for detached was 22. This number was 14, significantly faster in August, but in September, only about a day faster again, typically. But then when we get to price, we see the exact same kind of pattern that we saw in the detached market as well. Faring okay kind of earlier in the year, but then at some point you can see that green line pulling below the orange, and it was almost always below the blue, but pulling below the orange and taking a pretty decent hit in terms of your median price for semis. So when you look at September, for example, this is a $98,000 gap. In 2024, your median semi sold for $1.155 million, so $1,155,000. September just passed 2025, $1,057,000. So despite the fact that the semi-detached market seems to be faring a little bit better than the detached market, it's not immune to the same kind of effects on pricing that we saw in that segment as well. So how do we summarize all this? The detached market, I would say, is a little bit more buyer leaning, and semis is very kind of like balanced but selective. I have seen properties, I'll give you an example. I sold a property at the Bloor and Dufferin area. Our property needed some work. It was a lovely opportunity for somebody, but it was going to be one that people needed to, digest a little, right? Is this the right place for us to, put some capital into it and make it our own? But there was a place across the street that was very turnkey, and it was a lovely home, same street, but not nearly the same kind of project that ours was going to be. And that place got 17 offers. So that's an anecdote, but this still is a market where the right places are going to be targeted by buyers. And what I'm seeing personally is that buyers are being more patient, they are being selective, but then when the right place comes along, they all turn their eyes to the same place. So one particular kind of great listing can get completely flooded with attention, whereas other properties in a similar area, if for whatever reason they have something about them that makes them sort of undesirable, they're just not going to get nearly the same response. Bear that in mind as a buyer, bear that in mind as a seller. Even though market circumstances are a little bit balanced or maybe a little bit kind of like buyer friendly, you can still absolutely run into individual properties where it feels like it's like the spring of 2021 or something like that all over again. So bear that in mind. If you play it smart in this market, it can work for you no matter what side you're on, but it certainly depends on, your expectations. So if you're buying, I can help you find that leverage. Which buildings and streets and pockets are maybe a little bit soft? Which types of properties are moving? Which properties are not? Which ones do you have maybe some negotiation room? You can get some conditions into your offer. How do you write offers that win without overpaying? If you're selling, I can show you how to prep your property, price it properly, and position it so that it doesn't become that listing that gets stuck on the market where everyone else is getting a bunch of attention, or at least some of those other properties are getting some attention. So you can book a no obligation consultation with me using the link that's in the description. And if you found this video helpful, if you enjoyed it, I would be thrilled if you would subscribe, have a look out for new kind of Toronto market insights, and let me know in the comments, what are you seeing in terms of action out there? Are you in the market for a detached? Are you in the market for a semi? And what has your experience so far? I would love to hear from you. Thanks for watching. We'll see you next time.